Hey, everybody, it's Eddie from Tokyo. This is your cryptocurrency update from Japan. And I think if you own any crypto asset or thinking about buying any crypto asset, this is a guy you want to pay attention to. That is Brian Brooks. He is the acting head of the US Banks regulator. And Julia Chatterley from CNN did what she does best, and that's bringing a big, bright spotlight to Fintech. And in the response to the interview that she had with Mr. Brooks, Corey Johnson, who was once with Ripple, tweeted the obvious implications for Ripple and XRP were in this interview. Now, I want you to listen to just portions of the interview, but then I'm going to take you actually to a podcast where you can hear Brian Brooks in his own words, which was just uploaded about 5 days ago, a little bit more in depth to some of those same points that he talked about with Julia. And so we're going to listen to this one portion in the interview with Julia where he's asked about the pushback from banks. Have a listen.
The pushback that you're getting here is from existing banks, whether at the state level or those that are federally regulated. I mean, they have existing businesses, I guess, to protect. The problem is they don't best serve the customer.
Well, that's the thing, Julia. And if you look at what the reason is why so much payments activity has moved outside of the banking system, part of it is because consumers want to receive their services in a different way. I mean, let's face it, there was a time when we all used to buy our clothes in department stores where we could also get our oil changed and have lunch. The world changed on the high street shopping market, right? Now we all go to boutique stores. We buy our computers at Apple, our jeans at Levi's store, etc. Banks are sort of the last bastion of the amalgamated comprehensive supermarket, if you will, of financial services, but that's not the way consumers shop anymore. The other thing that's really important is markets look at these companies very, very differently. So it turns out the return on equity for startup tech companies is far higher than the return on equities for banks, which is what creates strong market incentives for these services to move into specialty platforms and outside of comprehensive banks. All of which means that if we don't rethink what the bank charter is and find a way for the bank charter to be broad enough to encompass services that were historically provided by banks, we're going to have a problem.
So if we don't rethink what the bank charter is and we find a way for it to be broader in services, we're going to have a problem. That's why I think he is very open to the cryptocurrencies, because this could add a very important new layer of services. And also, in addition, it was why on June 4th, in his first week under acting controller, he released this advance notice of a proposed rule change. And it related to the digital activities, including cryptocurrencies and blockchain technology. He was asking questions of the banks like, what obstacles to further adoption of crypto-related activities do you see as barriers? And all the questions were posted for the public to see on July 7th. And then all the comments had to be received by August 3rd. Now let's listen to the portion where he talks about SWIFT. I like this.
We're going to have a problem.
SWIFT. Some people will recognize this term, others won't, but it's the way right now that the system works and the information, the money is passed between banks, and the last thing it is SWIFT. It's clunky, it's slow. Those outside of the industry, particularly in the fintech sector, know there are better options. Brian, is this the plan to replace, improve on the existing infrastructure that SWIFT is at this moment?
Well, Julia, you make a great point that SWIFT is one of the most ironically named organizations in the world. The joke in my world is that if you wanted to move money from America to Australia, the fastest way to do that is to load it in a suitcase and put it on an airplane, which is a little bit crazy in the right? So to me, what has to happen is there are faster solutions, and they exist in other parts of the world. So the UK, Singapore, China, many of our global competitors have adopted real-time payments. In the US, that seems to be still years away unless we allow existing technologies to do the work for us. And I think that's very possible.
All right. So listen to this podcast where he was a guest of Jeremy Allaire from Circle, and he talks in more depth about how blockchain might look like SWIFT in the future. This is when he was asked to predict the future.
Years is tricky. If you'd said 30 years, I think I'd give you a more accurate vision. I think 3 to 5 years has a lot of dependencies on, does our economy reopen in the next 6 months? What happens with the presidential election? What happens with China on various immediate issues of national security? So, but what I would say is, if you kind of assume a steady state on all of those things, what I think will happen is 3 to 5 years from now, I think banks will be connecting to blockchains the same way that they connect to SWIFT and ACH and other networks. Right. Once they do that, the nature of banking will begin to change, because while banking will always, I believe, be the key on-ramp and the key value-add service provider to people's financial services lives, they will not be the bottleneck of the transaction of financial services. Instead, they will be nodes on a network along with a lot of other nodes, many of which won't be banks. And that will really change, I think, and allow banks to focus on what they're best at and what we really need them to do. So I think that will happen for sure.
So he expects banks to connect to blockchain like they do to SWIFT today. And then if we just go a little bit further, we hear a touch in the interview with Julia about the CBDCs. That's the central bank digital currency. And you could call that also a stable coin. It is like backed 1-to-1. It's a stable coin that would be backed to the dollar, but it would give the dollar this digital mechanism. And this is very interesting because it's where the world is moving to. All right, so let's set it up first with the portion that he talked about in Julia's interview.
Very possible.
Brian, how quickly can you do this? How quickly can you achieve this, given, as we've discussed, there are existing resistant points, and they're pretty powerful in this country?
Well, they are, Julia, but in the world, there's nothing more powerful than markets, because markets represent what millions of consumers want every day. And so my job is not to build new payment rails. My job is to identify impediments that make it harder for people to get what they want and need. And at the OCC, we have an ability to do that. So among those include the questions of, should banks be allowed to participate in the cryptocurrency market at all? Should banks be allowed to connect to blockchains? Should we have central bank digital currencies, perhaps issued by private companies, but backed by bank deposits? I can identify what the impediments to that are and try and solve that so people can get what they want as they express through markets. I think that's very possible.
He really, really is a flexible thinker. All right, now let's listen to the podcast where he talks about how the dollar needs to transact more attractively. This transactional mechanism, stablecoins and blockchain together, can help the U.S. preserve its role of the reserve currency. So listen to this. This is interesting.
Well, Jeremy, I think there are a lot of ways of thinking about stablecoins. There's sort of a short-term, a medium-term, and a long-term way of thinking about how they can improve our sort of system. But what I think about it in the first instance is it's an issue of competitiveness. So when I talk about stablecoins, what I sort of say is the dollar has been the reserve currency for a long period of time, not because it's necessarily better or easier to use or anything. It's the most liquid currency because of a set of historical anomalies that happened sometime between the end of World War II and the mid-50s. Right. And the world we live in isn't that world anymore. So the dollar is still the reserve currency, but only because we're still running on that history. Yeah. The problem is the history is not likely to preserve our role as the reserve currency forever. And you see this in the fact that global central banks have been reducing their dollar holdings and diversifying away from the dollar every quarter going back now 4, 5, 6 years. This seems to be an inevitable trend. We're still the most important, but we're way less the most important than we used to be. Right. And in a world of competition, my view is that the dollar needs to transact more attractively than others, right? So if we're no more liquid than the renminbi or the euro or something at some point in the future, we could still be the currency of choice if the transactional mechanism for dollars is superior to the transactional mechanism of other kinds of things. So I think it's that suite of issues that stablecoins and blockchain can ultimately help us with, is to preserve the role of the dollar in the system.
Yeah, we sort of have this superstructure that got created, definitely pre-internet, and we've sort of seen electronic money, evolve in different ways, and now you have the superstructure of the internet. And you have, obviously the dollar as this preeminent reserve currency, and so it's sort of like, how do you turbocharge that? How do you put those together and just give the dollar, the superpowers of the internet.
That's right. Exactly. We used to call it the programmable dollar. The stable coin was to the dollar what email was to the letter. You're still typing, you're still sending information.
Right.
Man, it's faster, and you can attach videos, copy multiple people, and it's free.
Yeah. So how do you turbocharge the dollar? Supercharge that dollar through the powers of the internet. Now, what about CBDCs? Do they compete with XRP? The answer is no. It complements it. It solves the liquidity, bridging the different currencies. As Emi Yoshikawa from Ripple said in her second part of an interview today with FX Coin, this is an exchange that is backed by SBI. And if you remember, I did a really in-depth video on the CBDCs that are being transacted between Hong Kong and Thailand. And they had the biggest problem, which was settlement. Because of the imbalance there, they needed to have help. They needed to have a settlement bank in the middle because they didn't have the mechanism to balance out the differences of the foreign currency. So it is absolutely not a competitor. XRP complements that. And if you want to read the full interview with Emi Yoshikawa, you can find it at the fxcoin.jp site. Just go under the market tab. And wow, today there was just the biggest media blitz I have ever seen about Ripple and XRP in Japan, because Emi appeared in front of the media and there was no less than 10 major articles written that just went into great depth, and it included the slides that she provided when she gave that presentation. Never seen anything like it. She's going to speak on the 25th of August at FinSum, which is the Fintech Summit. It's going to be virtual. You can register for it, no problem. And I think it's going to be something that will be very interesting to listen to, because there's always some great announcements that come out of these events that are of this size. All right. And then last, so we've got this technology, right? How does it roll out, though? Does it roll out from the government? Does it roll out from the private sector? I want you to listen to Brian in his words with this same podcast where he talks to that question. This is good.
Well, look. So that's the inflection point that we're at right now, right? Is this the kind of thing that should be built by the government, or should we follow history and let the United States do what the United States does best, which is harness its strong, market-oriented, incentivized private sector to build something cool that everybody actually wants? What I would say is, I think that one way of thinking about where this all goes is the idea that there are public goods that don't necessarily have to be delivered by the government, right? So there's such a thing as public ownership that is different from government ownership. And blockchain is the classic example of that. So, imagine a world where you started in American history with one central authority in finance, which was the first bank of the United States. And that was the dominant central force in finance. Then decentralization was achieved in the 1860s when this agency that I work at was founded. Decentralization in the sense of, we decided not to have one bank in the United States. We decided to have a network of privately owned national banks all across the country that would operate and interact with each other in a certain way. But there was now more than one of them, and there were multiple of them in every state, and that was thought to be a good thing. It was more resilient, more accessible to people locally, et cetera, et cetera. Then, as you described, various kinds of money transmission and payments technologies came about, which decentralized the system still further. Yeah. Those banks started creating networks of various kinds, SWIFT as an example. But think about the credit card networks, where what became the Visa network was originally Bank Americard. It was a single entity, right? And then they open sourced it, and those happened. What I always find puzzling when we talk about this is why, given that history, people now believe that the payments system is a government service. It's definitely a public good in the economic sense of there are benefits created by it that cannot be fully captured by the owners. So in that sense, it is a public good. But why do we think it has to be owned by the government, when none of the things we've just described were ever owned by the government. My personal view is the ultimate public ownership of the payment rails is when you have a network like the internet of interconnected institutions and computers that are maintaining ledgers and allowing direct person-to-person transactions. So as you said at the beginning, the internet's the classic example of that. And so I think we're way down the path of decentralization. I think we're now maybe close to the point where we will achieve ultimate decentralization.
Yeah,
but we've been on this journey for 200 years.
Yeah, and this is parallelized in a lot of industries, right? This is sort of the financial industries has a history of this, and it's going further in some respects. And public blockchains are by definition public goods. They exist for the whole world, and not just for moving money, for all kinds of interesting proofs of ownership and record keeping and zillions of other applications, right?
And yet public doesn't mean government, right? It's something that can spontaneously spring up in a market.
So public doesn't mean government. Very, very interesting. And then last but not least, let's just hear the very last portion of this to finish it off.
I read recently that 15% of Americans now own some form of digital asset or a cryptocurrency. You also want to tackle this and make sure that banks can provide services as far as digital assets are concerned. You're trying to protect consumers again.
Well, look, in a world where 50 million Americans do hold cryptocurrencies and many, many millions more outside of this country do, to me, we can't ignore that phenomenon. So I am not a crypto bull nor a crypto bear, but I recognize reality. A lot of people have this stuff. They have it for good reasons, and we need to make sure it's accessible to them in the same safe and sound way that they can get their checking account. So that's our role, is to innovate as people change the way they consume financial services in the future.
I love that answer. It's great. Can't ignore it. Thank you to you both. I tell you, that was a great interview, Julia. All right, everybody, we're jumping to the fluff. So I just saw the greatest story today on Twitter, and there is an inn in Kanagawa, which is the prefecture kind of southeast of Tokyo, and they are providing a place you can stay, and then you actually have a cat that stays with you. And what it is, it's a trial. You can have a night with the cat to see if this is maybe somebody who wants to be a part of your forever home. I think it's a really innovative way to find homes for those kitties who don't have cats. And according to the website, they are very, very successful. So a lot of these kitties go home with their new forever home. I just think this is a great idea. And then I started to think that, wow, there's such a difference in, at least from the US, where I grew up, and Japan, in terms of the way we name our pets. So I looked up on the internet and found that for cats, in terms of names coming from America, they're very gender related. So you have, like, for the male cats, Oliver, Leo, Charlie, Milo, Max. And then for the girl kitties, you have Luna, Chloe, Bella, Lucy, and Lily. Funny, so many L's. Those are the top 5 names within those categories. But what I really realized in the difference is, in Japan, it's not so gender related. It's more attached to food and drinks, and sometimes other animals like a dragon or a tiger. But the number 1 name is Momo, and that means peach. And then you have Ringo, which is apple, Ichigo, strawberry, Mikan, orange. Yuzu is a type of citrus fruit, very important for cooking. Mochi, which is sticky rice. Anko, bean paste. Sumi, which is the black ink that you use for calligraphy. Ocha, which is tea. Sakura, Sakura is actually used for a girl's name who is, a person too. So that's cherry blossom. And then there's Ran, which is orchid. Hana, which is flower. Hana too is another common girl's name, not just animals. And then there's Fuji, which is a type of wisteria. not Mount Fuji, but the flower Fuji. And then Tora for tiger, Tenchi for angel, and Ju for dragon. I think it's just interesting to look at the differences. So I would love to know what country you're from and what are the common names in the comment section. That'd be fun for me to read. All right, everybody. Yes, do take care. Sayonara for now. Bye-bye.